Good morning, traders and investors. Roger Scott here, Senior Strategist for The Trading Pub. It's Monday. It's October 16th. My birthday's less than 2 weeks away. I can't believe I'm going to be 53 years old. Oy vey, don't get me started. It's about 7:51. The market's going to gear up to open up in, about an hour and 39 minutes, if my math still serves me right. Before we get too deep into this video, and I don't want to make a big deal out of this, but please, go to YouTube and go to Roger-Scott. That's our YouTube channel. I post these videos there every day between 8 and 8:45, somewhere around there. And if you hit the bell, you'll be notified every time I post it. Also, subscribe to my Telegram channel, where I've been giving people free Red Meat trades all day long over the last couple of weeks, and they've been very, very happy. You should see some of the emails I've been getting. But go to rogerscott.com/telegram and subscribe to my Telegram channel. Most importantly, send me an email, roger@rogerscott.com. You could find all of the information that I just told you below each and every video we post. And don't forget to come into my VIP room today. We haven't separated it yet from the day trading room, so you can still get some freebies there. It's worth its weight in gold, if I do say so myself. It's happening at noon, Monday through Wednesday, and today is Monday, so it's happening at noon Eastern time. All right. Hopefully I didn't waste that minute. Let's get into all of the goodies. We do have a lot to talk about today. So it's earnings season. So we got to be extra careful today. Before we get into the earnings part, and I'll talk about that plenty, I want to talk about what's going on right now in the market. So Nasdaq is up about 20 points. The Dow's up pretty good. I would imagine energies are up again. Yes, they are. They're right here because of what's happening in the Middle East. It's not as long as it stays elevated, energy prices will stay elevated as they are right now. You could see here that we're bypassing. Let me just erase this. We're bypassing the 50-day moving average to the upside. We're now above that. My hope is that we can go above this level here, which is the 92.82, which would mean we would make a swing high. I believe we will be making a swing high in the energy sector. Looking at other sectors, and I don't really need to see how they're doing right now. I need to show you how they were doing last week. Money was coming into technology, communication, QQQ, which is technology and communication. But outside of that, in terms of the S&P, energy got a lot of love last week. Matter of fact, let's see how... Yeah, energy was last 5 days. Energy, utilities, real estate, industrial, Dow Jones, financials. So you could see the S&P has actually been outperforming technology because interest rates are going to go higher, and it's impacting tech stocks. So for the last 5 sessions, technology, communication services, and consumer discretionary have actually not been that high up. So over the last 2 weeks, technology is still leading right here. Look. But over the you see technology, communication, QQQ, but the last 5 trading sessions, energy, utilities, real estate, industrial, Dow, blue chips. So it looks like we're switching from the technology sector to being the major driver, communication and technology, to energy, utilities, more defensive sectors, more blue chip sectors. And I don't know if that's going to continue or not because we've got earnings this week, and earnings have a way of changing everything. Now, this is supposed to be the last earnings season where we have a negative or a downside in earnings, in EPS and flat revenue. Next quarter, it's supposed to be higher. If they hold up really, really well, we may start getting a rally in light of what's to come next quarter. But I want to show you something, and I want to talk about earnings before we get too far in advance. So first of all, this is a chart. I'm going to post this on Telegram today, so you'll get all of the earnings that are coming out this week. You'll see which ones are important, but I've also highlighted the most important ones for you via this. This is an implied volatility expectation, and it's below the earnings. So you could see here, Schwab, Johnson & Johnson, Bank of America, defensive stocks, Goldman Sachs, Interactive Brokers, UAL, airlines. You got Tesla on Wednesday, Netflix on Wednesday, and here's what the expected volatility is, the expected movement, either up or down. So if you don't think Tesla's going to go up or down 7%, maybe a good time to write some options. We'll talk about that in the VIP room, but you could see here all of the different stocks that are being impacted. And you could see here it's pretty broad. I mean, you've got airlines, you've got healthcare, you've got banks, you've got Lockheed Martin here, you've got Goldman Sachs. We're everywhere. We're pretty broad. Semiconductors, Pulte, Morgan Stanley, Las Vegas Sands. So why is this important? Well, let me explain something to you. Let me just put this up here. So when you're trading, say, Johnson & Johnson, right? Well, Johnson & Johnson is a healthcare stock, right? It's a healthcare stock. We know that, okay? So when you're trading healthcare stocks and Johnson & Johnson comes out with news, it's going to impact all of the industries within the healthcare, or at least drug manufacturing, right here, drug manufacturing, or this one right here, which is major drugs, specific generic drugs, possibly healthcare plans. So keep your eye on the entire sector. Don't think if Johnson & Johnson is getting impacted, it's just Johnson & Johnson. For example, drug manufacturing, J&J. Well, if J&J comes out with earnings, don't you think it's going to impact Merck, AbbVie, Pfizer? Do you see the point I'm making? Stocks are not isolated to themselves when they come out with earnings. So the best thing for you to do if you don't have this tool that I have is to go to bar chart and type in, say, Johnson & Johnson, right? Just say Johnson & Johnson coming out with earnings. And go right here to competitors. And see large pharma, competitors. If you're trading any of these stocks right here, they're going to be impacted by Pfizer. So even if you don't have this program here, which I have, which can drill this down instantly, you could do it right here just by going to ticker symbol. Let's say Microsoft, just for, and you could see right here under competitors, which means if Microsoft computer software is getting hit, all other computer software is getting hit. Very similarly to how I would do it here. So say Microsoft, okay? Well, there you go. Technology sector. It's telling you all the sectors. So be careful. Be very, 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 very careful. Because when you have earnings, they don't just impact the stock you're trading. They impact all of the related stocks. And again, I'll send you this in just a little bit on Telegram, and you'll get it everywhere else. Now, as far as data, you've got Empire State Manufacturing data today. Nothing crazy, but important. You've got retail sales and industrial production tomorrow. That's going to be really, really important because retail sales makes up a huge portion. Retail and services makes up our economy. Housing starts on Wednesday. Manufacturing again on Thursday. You're going to have a lot of manufacturing, industrial, basic materials, heads up. And you've got a lot of Fed speakers. You also have existing home sales, and I think I saw new home sales or new construction too. Maybe I'm wrong. But again, housing starts and permits right there. Housing starts and permits and existing home sale. So real estate, retail, industrial, it's all, and then you've got earnings on tons and tons of stocks. Don't think when earnings on Alaska Airlines come out, don't think it's not going to impact American Airlines or other stocks. So again, be very, very careful. Don't hold stocks overnight with earnings. It's okay to day trade stocks that have earnings tonight or already had earnings, but don't hold anything. Do not hold anything. Looking at the S&P 500 as a whole, you could see here that looks like we're coming down into the downside of this channel that's building. And if that's the case, we can expect some consolidation. We can expect some downside. Keep your eye and see if the low is broken or the upper area. If the 437.15 is broken, that's good news. If we break the low, 429.77, the odds are we're going to come back down all the way to this base. I'm right now probably 70% to the downside and about 30% to the upside, maybe 65, 35, but I'm definitely liking the downside more than the upside right now. As far as the Dow Jones is concerned, that was the S&P. As far as the Dow is concerned, we're right at the 200-day moving average. Keep your eye on these levels, on the 34,000 level. And then we don't have anything till 34,300. Or we're going to come right back down to the base. We're either going to come right back up or come down. So keep your eye. We're right at the 200-day keying off of it. QQQ. Oh, QQQ is very interesting. The QQQ is in a sideways channel. But again, this channel, although it's going down slightly, it's still a consolidation. But look, we're heading lower. And again, we're right below. Here, let me show you. We're literally right below the 100 and the 50-day line. There's a lot of volatility around these levels. This is why day trading has been so good, because we've been popping up and down the 50-day moving average. And it looks like right now we're right below it. If we start rallying, it could really trigger some buy stops. If we start going down, we're going to come down all here. As I said previously, I'm a little more bearish than bullish, but don't be suckered in if we just break a little bit higher, cause a little buying pressure to come in and come down. I definitely think the bias is towards the downside right now. And if you look at each individual sector, you'll see, look at that. It doesn't look like it has that much more upside. Energies possibly, but look at utilities maybe. But look at real estate. Looks like it's ready to go down. Look at industrial. Looks like it's ready to go down. Look at communication services. Looks like it's ready to go down. S&P. Everything looks like it's ready to descent, not ascent. Not everything, but again, things are just not, technology's just not looking all that great right now. So I'm definitely a lot more bearish than bullish. If we open up higher, keep your eye on the downside and keep your eye on the weakest stocks. And if we open down, keep your eye on the strongest stocks. And because if the market comes back up, those strongest stocks will jump. And if the market's trading higher and you're picking stocks that are sitting on the floor, they're just going to go right through it. Remember, we want to stay behind the shark. We don't want to be in front of the shark and get eaten by the shark. All right. Key speech by Federal Reserve Jerome Powell is on the table. Wells Fargo and so far financials are looking better than expected, and crude oil is too, driven by imminent ground invasion by Gaza, of Gaza by Israel. University of Michigan preliminary reading came in weaker than expected, and the market fell apart. We've got Fed President Harker speaking on Friday saying that disinflation is underway. Really? Have you looked at the CPI, buddy, lately? Disinflation is on the way? Don't even get me started. There's a 30% chance that a 0.25 basis point rate hike is going to happen. As Jeff Smith says, it's stickier than his barbecue sauce. Inflation. I love that. 30.4% that they're going to raise rates a quarter of a basis points. I actually think this number should be about 40, 50%, but they may raise rates in January, February instead. Earnings season is picking up. Financials, and more financials. Also Tesla, technology, healthcare, airlines. We're all over the place this week, which is going to make holding trades overnight difficult. We've got a smorgasbord. What is it? Smorgasbord? I can't pronounce it. We've got tons of data this week. Retail sales, building permits, Fed manufacturing, existing home sale, manufacturing, crude oil. It's coming our way fast, and we've got Mr. Jerome Squirrely Powell speaking as well. He's going to talk about the CPI data, which came out weaker than expected, Mr. Harker. I don't know if he saw that or not, and so did the PPI. Europe is keying off of U.S. Their investors are waiting the prospects of an escalation in the Middle East, which is absolutely happening. Utilities, tech stocks underperformed on Monday. Utility stocks did really well here in the U.S. China closed lower even after the country's central banks made the biggest medium-term liquidity injection since 2020. They are not doing well. They injected a lot of $789 billion worth of liquidity into their banking system. My God. China's securities regulator announced on Saturday that it would impose limitations on security lending activities and tighten scrutiny of improper regulatory arbitrage. Well, I hope that gives us some tailwind. Nikkei, Japan is keying off of U.S., sharply lower, mirroring decline in the S&P 500 on Friday. Concerns over Israel and Hamas war. Heavyweight chip stocks retreated on Monday, and I'm looking for more of that today here. LULU climbed 5% because they're going to be, I was wrong. I thought Dell and I thought AMD. No, I thought Dell or Trade Desk were going to be going into the S&P, and I was wrong. It's going to be LULU. But we did make money on Dell trading off of that last week. You also have Pfizer, you have EH, you have Hub, you have KBH. It's going to be a very frisky day trading session today. Now, before I let you go, folks, I'm telling you right now, energy is where you want to be to the long side. Utilities is where you want to start looking to the long side. As far as other sectors, I'll be honest with you. This is not a time to be a hero. We could start seeing some upside on consumer staples. We could start seeing some upside on energies, or more upside energies, and we could be seeing some more upside on utilities. But I'm very, very skeptical about upside in tech or any other sector right now. Very, very, very skeptical. And remember, We're going to meet at noon in the VIP room and go over all of this stuff. Now, there's a stock that I believe could surge nearly double digits next week. It's a small little company called Alphabet. And if you haven't heard of it, well, obviously I'm kidding around. Alphabet is a parent of Google. And I'm hosting a live presentation tomorrow at 1 p.m. Eastern Time on Tuesday to explain why I think it's about to pop. Plus, I'll show you how you can legally front run some of Wall Street's biggest hedge funds and how the strategy has unlocked gains of like 55% in a day, 76% in 4 days, 142% in 3 days. You guys are going to love this. It's happening at 1 p.m. Eastern Time tomorrow. Follow the link below. Subscribe to my Telegram channel. Please, for your own sake, subscribe to my Telegram channel. And remember, LULU is getting added to the S&P 500. We got to watch the stock very carefully. I think it's happening on Wednesday. There's going to be a lot of day trading opportunities today. Keep your eye on Telegram. And I'll talk to you guys later. Any questions, comments, or feedback? You know what to do. Roger@rogerscott.com. I'm back. Bye.